The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis, from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. Folks, there's something wrong in the Heritage House, as old Billy Ray would say. Mortimer and Randolph were talking to people at Pfizer, and they were asking him, the CEO of Pfizer, how can you sell 62% of your stock the day that they announce that they've got a vaccine? Now, that's not right, boys and girls, I don't think. I mean, why would he do something like that? There's no reasoning behind it, but he had to report it, so I don't know. When I was going off to college, my mother said to me, she said, look, you're not the sharpest knife in the drawer, but hang around the people that'll get you to the promised land. And she told me to hang around as many Jewish kids as I possibly could. This is the absolute truth, folks. That's what she told me. She said, they've been well schooled better than you have, and you'll learn something just by hanging around them. And I certainly did. I tried to join a Jewish fraternity. I was actually a Sigma Phi Epsilon. I tried to get into the Jewish fraternity. I felt a thigh, but they wouldn't take me because I was not Jewish. And so I had to pass on that. Now, folks, just because that guy sold the stock doesn't mean anything. But to me, it's market feedback that something is not right. I mean, you know, he certainly doesn't need the money. I mean, he's been the CEO for a long time, but you got to ask yourself the question, why would he sell 62% of his stock? You know, the virus, you know, it's a bad virus, okay? But in perspective, you know, we've lost 1.2 million people on the globe, folks, out of 7.3 billion. Billion, B-I-L-L-I-O-N, not million, billion. That's a very, very low death rate. And people get the virus, they don't all die. Some of them don't even get sick. You know, I know some people are more scared of it than others, but the old people like myself should raise their hand and be scared. But, you know, I'm frankly not that scared. I mean, if I get sick and God calls me, it's time to go. And if it's not God, then I'm really in big trouble. Anyway, let's sort of pay attention to what these people are telling us in the news, because that is market feedback that is very, very important. Now, we will have Stan Harley as our guest here at the break, but I wanted to go over a couple of stocks that are in the news that are important. I want to show you Bitcoin because it's just not backing off, folks. Even with gold down $140, it's still getting really close to that 16,500, which is going to bring you to the 78% level. Folks, that's 78% level from the high in January of 2018. That absolutely 100% proves to you that this is not a bubble. Hasn't been, never has been. If you looked at it on log charts, you can see that, you know, quite easily. But it looks like, you know, it's going to be going a great deal higher. And with all the stuff going on in the world, I'm not surprised that that's not happening. Okay, I know as little about the virus as I do about politics, so I'm just looking at charts, and let's just take a quick look at some of them that we're watching here. Folks, if you remember yesterday, we talked about the crude oil making that big ABCD pattern. I want to get this up here and show you what happened here, because here's what's been going on today. You'll notice that after we made that high up there at 43.06, we came down and we stopped exactly at the 382 rally at 41.94. The high was 41.95. We're now trading around, I don't even remember where we are now. I think we're 41.40, something like that. But that 382 is a very, very important number. And the reason why I'm bringing it to your attention here is because here is what I think is happening in the stock market. Okay, now this is just based on little stuff like, you know, that we look at. All right, let's make a quick look here at this here. This happens to be the euro. Let me get this up here today. It happens to be a 30-minute chart on the euro. It's the pattern that we're looking at, folks. It's not the time frame, and it's not the vehicle. It's the pattern. I want you to know how many times the euro has hit that 382 retracement over the past 4 trading days. It hit it once, twice, Today it hit 0.40 and then it's backed off. So that number is very, very big because it helps determine the number of where the trend should go. Because once you get above the 382 substantially, like above the 50%, then you're looking at a market that is getting ready to go higher. Until that happens, that is not going to be the case. Let's just bring this to your attention one more time. If you remember, we've been very bearish the gold market. And we went right up to that number we were looking at when it was 1958. The high was 1967. We took out the lows of October and September. And right now we're trading at around 1875 or something like that right now. We haven't made a 382 retracement on the upside as yet. We could easily do that, but this is still a very bearish market. It would have to take back all of those losses in a matter of a day or two in order to turn us bullish. But that's really, what we're watching these patterns here is nothing more than repetition over and over again. Now, we're going to take a look here at the E-mini S&P, because if you remember the last 3 days here, I have been talking about the strong resistance at 35.69. That was a 382 retracement. Well, we got as high as 35.76. Got there in over a period of yesterday a couple of times, and then now we've started to back off a little bit. Well, I issued a sell, if you'll remember, those of you that belong to 24/7, at 35.69, and then I tried to cancel it, but it was too late to cancel, so we're stuck with that. It's working right now. So what we're doing now is put your stop at break even at 39.69 and pray for the best, whether that turns out to be okay or not. I happen to not be involved in that one, and the reason why I canceled it because the Nasdaq was acting a little more bullish than the S&P, but that's been going on for quite some time. But look at the Nasdaq here, folks. Here's the Nasdaq over the past several weeks. You'll be able to see some of these little patterns that we look at. You'll see the really nice 3 drive to a bottom pattern, perfect ABCD down there at 10,985. Then you'll see the 61% retracement there at 11,510 that we told you about on the 10th. And now what we did yesterday is we got, actually it was today, we got up to the 50% retracement to the exact number, 11,965. Until we get above that, I believe we're getting ready to go down. Now, I have no idea with the fundamentals or the coronavirus or things like that. Folks, when they tell you that, there's now 1,200 people, dying of the coronavirus every day. Folks, the average daily death in the United States is 750 per day. So, some of that is just regular people just passing away. And, they had, well, let's not, I don't want to do this. Okay. I don't want to go into the, I'm just not nearly as scared. No, Tom is saying those are not regular deaths. Well, I thought that you said there were so many deaths. Those mean so there's 1,000 COVID deaths. Well, I tell you what, Tommy, I know everybody's scared, and I guess I should be scared. All I know is here in Tucson, if someone dies of COVID, the hospital gets them somewhere between $30,000 and $70,000 extra. Hey, let's take a break. Save the old cowboy. We'll be right back. I have something very important next, folks. You got to listen. Very, very important.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I also want to bring out the chart of the Dow Jones Industrial Average. You'll notice that it made a 61% retracement of the low that we made down here on the 10th. The others only made a 382 on the S&P and but the Russell and the New York Stock Exchange Index went higher and higher. So there is a lot of divergence in here. These numbers could be wrong, but if we get above the 3575, this would certainly be wrong in the S&P, and we're not going to go lower. We're most probably going to go higher. Now, boys and girls, we've been doing this now for I started here in 07, so it's been 13 years I've been doing this show, and what I'm going to tell you now is extremely important. All of you remember the movie, won many Academy Awards in 1968, called The Graduate, and if you'll remember, Benjamin was there by the pool, and his father's friend came up to him and he said, "Benjamin, I'm going to tell you one word, and this is going to change your life." And do everybody remember what that one word was? Plastics. You're right. Well, boys and girls, guess what? You're standing by the pool, and I'm Ben's father's friend, and I'm going to tell you what's coming up next. Are you ready? Carbonomics. From our friends at Goldman Sachs, the ones who gave us the bullish report in October 2017, 72 pages of why it was almost impossible for crude oil not to go to $200 per barrel. The high was 144. That report came out when it was 141. And you'll never guess who was selling all the way down. So boys and girls, it's not what they say to you, it's how they act. If you remember, we had Joe DiNapoli on here a couple of weeks ago, and he reminded me, he said, "You remember the most important thing you ever taught me?" He said, and he said, "The most important thing that I ever taught him was they can lie to you, they can cheat you, they can hide from you, they can give you misinformation, they can give you fake news, but they can't hide from you. And if they're buying, prices are going up. And if prices are going down, there's more selling. And what are we seeing in Pfizer here with this big virus thing? It's been going down. Little food for thought. I don't know. We'll have to wait and see how that works out. But remember, the new buzzword now is Carbonomics, you'll be seeing it all over the news, and whatever the news media wants us to tell us, that's what we'll be what we'll be listening to for the next few weeks, years, whatever it happens to be. Okay, let's move on to the other thing that I wanted to mention to you. And that is I already posted the chart on the crude oil, what we're possibly expecting there. We've already talked about the euro, the Japanese yen. That trade has just been working great, as the dollar, the gold trade. Both of those are working pretty good. We tried nibbling at the grains yesterday, but we were not able to get filled. We misfilled in the corn by 2 cents, and it dropped 17 cents. Wheat dropped about 20 cents. Soybeans would have been a break-even scenario, but we'll have to wait a little bit to see what the next swing is going to be, because a lot of these patterns completed with that real bullish report. These reports that come out, like the one we had Sunday, well, it wasn't a report, but the announcement, when you see that much emotionalism in the market like you saw there, you got to be really careful, because hey, this market still looks bullish, folks. You know, I'm not saying this is a top or anything. I'm just saying this could be a pretty good correction. That's what my job is here, is to try to do that. That's the main thing. Now, what I wanted to just get off base just a little bit here and show you something that I think is very, very important. I've had it in some of my PowerPoint presentations here over the past few years, and I think it's really important. It's from a book called The Little Book of Secrets by a man named Daniels, I believe. But if you don't worry about that Mercury, Venus stuff, that just shows you how they move around each other in the sky. But if you look at the bottom there, you'll see on the left, you'll see that circle with all the stuff in it. That's basically right out of Leonardo da Vinci stuff, the Geometry of Man. That was in the Codex book. But the important thing is that middle column there, where you see 1, 2, 3, 5, 8, 13, 21, 34, et cetera, et cetera. And then on the right, what you're seeing is when you divide 3 by 5, 5 by 8, 8 by 13, you come out with these numbers. And when you get to the eighth integer, which is 0.618, okay, it stays that way. It either goes higher or lower for infinity. It never changes. So you can take any two numbers. You can take your birthday and your wife's birthday and add them together, and keep doing the same calculation. When you get down to the eighth integer, it's going to come out to 0.618. So if you see two random numbers, you know that there's sometimes when you get to the eighth integer, you're going to be correct. Now, David just posted something just a little while ago about what was it? Sherlock Holmes, and I forget what it was here. Oh dear, David, do me a favor and post that quote by. Here, I got it right here. I'll just scroll up and get it. Sherlock Holmes, a famous statistician, once stated, "While individual man is an absolute puzzle, in the aggregate, he becomes a mathematical certainty." And that's what you're dealing with, is with these things here. You're able to see how these numbers work. Now, what does that mean for trading or anything like that? Look what happens. This is from our good friend Bryce Gilmore, one of the brightest guys I've ever met in the markets. Basically, you're looking at a price chart. You're looking at a square. Okay, within that square, you're going to see two right triangles. You notice the hypotenuse, that's that one on the right that slants down for those of you that went to Indiana. That tells you that that's what the Fibonacci ratios were, 1.618, 1.414. Then it has a pyramid. Within the pyramid, you have a circle. And then the lower left-hand, this is what you're trying to get to, is to find out where you are within that circle, and that moves you over to the right-hand side, and that's where you're trying to find the pattern that's lining up, whether it's going to be an ABCD pattern, a three drive to a bottom pattern, double top, double bottom. That's how you come to what those things are. So that's what I think we're looking at in some of these things. We've got some really nice patterns. We're having great volatility. You can't ask for anything better volatility than we're having. I mean, this is just absolutely terrific. Now, let me double check here to see where we are in some of these markets, because we're at some real key levels here. And here we are, folks. By the way, if you like numbers, and this is numbers, this is one you're going to like. Well, this is going to put the pedal to the metal, boys and girls. We're going to see the fat lady dance. She's already started to sing. Okay, you see that number there, 4181 in the crude oil? Take a quick look at it, boys and girls, because you've seen it before, and we're going to bring it up to you and let you see it again. And because here it comes right off the press, you'll be able to see. No fake news here, boys and girls. This is Mother God and Country, 41.43. So whether that's good or not, I don't know. What's good about this, boys and girls, is if it goes to 42, which is a difference of $180, you're flat wrong, Bubba. And you got to move on and get something else. Like my grandma said when I first started growing up, she said, always carry 2 quarters in your pocket. Because if that girl that you're going with doesn't like you, get on that bus and just keep riding until you're out of quarters, because you're going to find one no matter what. And you know what? I rode that bus twice in my lifetime, and I've used both quarters, and I'm out of quarters now. So I'm here to stay. We'll be right back with something important. Stan Harley up next.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Stan Harley of the Harley Stock Market Letter on the line. Stan, are you there?
Good morning, Larry. Yes, I am indeed.
Are you in the batter's box, my friend?
Yes, sir.
Okay, here comes a slider from Koufax, and the question is, do you take any value to the fact that everything that's happened on Sunday and Monday in the market is now below those levels? In other words, everybody that bought it on Sunday and Monday are underwater. Or mostly everybody, not everybody, but
kind of an odd question, but here's how I would explain it. The market, as measured by the S&P and Dow Industrials, is just broken out to a new high, and it's very common when a stock or an index breaks out to a new high to see that market or that index pull back and test the area right around the former high, and we technicians call that a retest, and that's what I see developing right now. I was previously, as you know, voiced my concern regarding the potential for further decline. That was my thinking a couple of weeks ago. We saw a thinning in the advance. Indicators were trucking downhill here, but what I always say is that the true attribute of any kind of trader or investor is not how adaptability. That's the word I'm searching for. And the market is broken out to a new high. So clearly, we have to respect that trend, and we are going higher. I am bothered, Larry, a bit by the fact that only the Dow and the S&P have broken out. The broadest measure of all, the New York Composite, still is lagging. It's January 17th high of earlier this year. That's a bit problematic. I would feel much better to see the NYA join the new high club. But I believe because the Dow and the S&P have pushed higher, I think you're going to see a broad market advance. And yes, you are going to see the NYA, I believe, join the new high club. The advanced decline line recently went to a new all-time high. There's divergence there that was a bit problematic for me. You had the AD line at a new high and the NYA index itself not confirming. Mm-hmm. But over time, there's a push-pull lead-lag effect among the various indices. We can get faked out along the way. But ultimately, I see the path of least resistance for this market northbound, Larry.
Okay, now, you've been spot on. You've been one of the best timers for the last 15 or 20 years. And this is the first time that I can remember that, you've laid a beautiful bearish case out for us. Now, is this related to what's happening to the virus vaccine or anything like that? Because the numbers that you had were pretty much spot on. This big blow off that we've had. The question that I have is just this an aberration, and what would make you change your mind that we're not going to go much higher?
No, I don't think the virus has anything to do with it. There's a cycle, an intermediate cycle, I call the primary cycle, that I have tracked for, I want to say not years, but decades. It averages about 169 to 172 trading days. My work says about 169. The Foundation for the Study of Cycles has it pegged at 172 trading days. We're talking about the same cycle. It's about 8.5 to 9 months. That cycle waxes and wanes over time, but that's the average over the long haul. And that's what I believe the trough in that cycle, the latest trough in that sequence, occurred on the 30th of October. What is interesting, though, is it was not much of a decline, although you saw some divergence between the Dow and the S&P. One broke lower and the other one didn't. And that with the benefit of look back, defined the cycle bottom in addition to the timing. But when you put it all in the shaker and give it a good shake, you have to respect the price. And clearly we've got the Dow and the S&P now breaking out to new highs. The chop shop that's ongoing right now as we speak, I think, is just a test of the February high. And I think once this chop shop is done, I think we're going to grind steadily higher. Not swiftly, but slowly. I think this is going to be more of a slow grind higher and not a sprint.
Okay, well, that certainly makes sense. But, we're starting to see volatility. I mean, when you see the Dow up 1,600 points in one day, I mean, I thought it would be on the downside to see 1,600 points. But I think that's probably the biggest day we ever had in the Dow on the number of points. I know it's not percentage-wise, but number of points, that had to be almost a record. I'm not 100% sure of that, but that would be my guess.
Larry, you are correct on that. I see you've got the daily chart of the S&P that I prepared up on the screen. And what I've done here is I've drawn with the magenta lines, 3 of them on the chart. The center one is across the high that occurred back on February the 19th of this year. The lower one bounds the 2 bottoms we saw back on September 24th and October 30th. And the upper one coincides with the September 2nd high. And as one can see, we have broken above that. We are doing some sideways chop in the vicinity of that September 2nd high. That's a very common pattern that technicians look for after a breakout. It's very common to see a market pull back and test that region. But I think following some short period of sideways chop, I think ultimately this market, despite the bad news that's out there with respect to the COVID virus, which of course is getting worse again, the political uncertainties, the economics, Larry, favorable higher prices for equities and investors' willingness to expand PE ratios.
Well, I'll tell you, there's really some great volatility. You know, I do mostly futures and, you know, grains and stuff like that. And foreign exchange is just as normal as can be. You know, they don't even know anything's happening other than the Chinese yuan has gotten hit quite a bit. But, gee, the stock stuff is really, we haven't had this for happen. We have a question for one of our listeners. We got a break coming up in a minute, but do you do crude oil, Stan? I can't remember whether you do or not. I know you look at gold, but do you look at crude oil at all?
My work on crude oil is not current, so I'm not qualified to give an up-to-date assessment on the crude oil market. I have looked at it in the past, but I'm gonna bag out on that one because my work is not current.
Stan, I have some really important news to tell you. It's going to be a revelation to you, okay? I'm not up to date with it either. I'm not qualified, and yet I do this show every day. So, you know, some of it is just, you know, pretty good here. Now, you were still bullish on gold long term, as I recall the last time. Was that correct?
Yes, indeed, and I still am. Gold, as you know, made a new all-time high in August of this year. It's backed off into the area of the top that occurred back in 2011. But I think following this little chop shop that I see ongoing right now, I think the metals market will push steadily higher. And I think you're going to see gold at new all-time highs early next year. Okay. Silver has got a ways to go to get back to the 50 level from January 1980. But I suspect silver is probably going to join the new high club as well.
Hey, Stan, thanks for joining us, my friend. And be safe back there, pal, because you're getting into that 7th furlong. You got to be careful.
Absolutely.
Love you, buddy. Thanks a lot. We'll have you on again soon, so be safe.
Will do.
We'll be right back, folks.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need a stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. And I wanted to bring to your attention an article that Rich Anderson had sent us about the price of Alibaba. It had that incredible sales promotion that they usually have, the day of 2 days of sale, whatever it was, $79 billion, and yet the stock was down 9.8%. There was another example there of really, really bullish news and the market not responding well to that. That's a market feedback thing that you really need. But I don't think there's anything any more important than what we saw with that CEO from Pfizer and Company that showed that he was selling 62% of his stock, and yet the stock went down. And I don't, that's a little suspect to me, but, I'm a little bit of paranoid, I guess. But remember one thing, folks, my grandmother used to tell me this: the paranoid person only has to be right to prove that he's paranoid. So it's very, very important. Marshall asked a question. Since we were up 1,600 points in the Dow Jones Industrial Average, does that mean 1.618 to the downside? Yes, it does, Marshall. And that would be 3,200 points, roughly. You multiply 1.618 times 1,600, it wouldn't be 32. It would be about 2,200 to the downside. So we'll be able to see. See what was going on here. Okay. It was a planned sell, nothing to see there. Okay, worked for Pfizer, never trusted them. Yeah, he could have been. I don't know anything about the options. All I did was read the paper. If he's exercising an option, he's got to take delivery of the stock. But I just read it. It just didn't make any sense of why he would sell. I mean, but what do I know? I read that book, Reminiscences of a Stock Operator by Edwin Lefevre, the story of Jesse Livermore, at least 50 times in my life. And if you ever want to read how stock markets operate, they haven't changed much in the 20s and 30s. Another thing that I wanted to mention is most of you know that Tom Hugard is a very close friend of mine. He's almost like a son to me. And where he trades over there, they trade in these what do they call these guys? Darn, I can't remember what they call them over there. What do they call those dudes over in the UK? It's not futures. It's something else. My memory has slipped today. But basically what they do is we usually get 20-to-1 leverage when we trade something. Like with the S&P, we're getting 20-to-1 leverage. Well, over there, what they're getting is 200-to-1. So they're trading 200-to-1 leverage. Do you realize how accurate you got to be to make money at 200-to-1? So what you've got to be able to do is you've got to be able to protect yourself, and they have guaranteed stops there. In other words, if you pay a $5 commission and you decide you want a guaranteed stop, they will charge you $5 more. So it's $10, okay, but you're guaranteed the stock fill. Well, folks, I can tell you without any qualifications at all about this, and these firms like that, they are taking the other side of the trade. In other words, there's not somebody, it's the firm that's taking it. In other words, all these traders are usually going against the house because they know, the house knows that 75 to 80% of these people are going to lose most of the time. And so it's an average game. So, what Tom does and what he does so well is that he changes on an instant, just like what Paul Tudor Jones, when he thinks he's wrong, he will get out. But sometimes, he'll take a big hit, but he comes back from it every time. So, it takes something really special to do that. Now, I have that paper, The Best Loser Wins. If you ever want to see it, just drop me an email, larrypesavento@gmail.com, and I'll send it out. It's the best 25 pages you can read, other than if you were reading Mark Douglas's book, The Disciplined Trader or Trading in the Zone. It's really that good. So let's pay close attention to it. Now, just give me a second here. Let's repeat what we're doing here in the markets right now. That level of 35.60 didn't go any higher. Now, the NASDAQ has been leading the pack again today, but in fact, it's not doing very much. Gold just made a 50% retracement off the high that it made a few days ago. Let me see what else is going on. The euro still is moving lower. That's pretty good. And the rest of them are not really doing very much at all. The one that you need to pay close attention to, folks, is the Treasury bonds, because, they're in a big bear market, folks. They really are. And we'll just take a quick look at them here, what's going on here with the Treasury bonds, because they should be topping up here at around 170, 120 here sometime today. There should be a great deal of what we call resistance up in that area. But as we've said many times now, there's no right now, there's no danger of what we call negative interest rates. That's really what you want to I still can't remember the name of that, what they call those guys over there. Oh, I've been in the offices and everything. I still can't remember. No one's helping me out. What do they call that over in the UK when they do this? When they do the trading for futures, it's not. I'll remember it and I'll get back with you today or tomorrow, one of the two. Hey, tomorrow we have a very special guest coming back after 1 month of vacation, and that is our good friend Norman Winsky. We'll be able to talk to Norm. He's been pretty good about it, so we'll be saying to look at it. No, it's not punters or blokes or anything like that. It's it's such an easy thing to do, but when you're moving around here trying to tell too many people a whole lot of things today, it slips my mind. But as soon as I'm off the show, it will jump out at me, and we'll be able to move on here to take a quick look at it. Okay, let's move on to another question that someone had, and that is, how much do you risk on each trade? Spread betting. Jassel, thank you very much. You got it right, Bubba. Thank you very much. It's called spread betting. And I won't tell you how the word spread betting started, but you can use your imagination on that one. Anyway, if you'll take a quick look at on stops, Tom worked for Michael Spencer over there at City Index for many years. He was on CNBC quite a bit, and he would always give his reports. He was very good at it. I met him in 2003 at a Vegas seminar with Bryce Gilmore, and also he had the same access to the accounts like Mark Douglas did at Merrill Lynch. He had over 10,000 accounts, and when you looked at those accounts, most people lost because of one of two reasons. One is they put their stops too close, or two, they didn't use stops, because they would have these tremendous losses. A guy can be right 90% of the time, and then he turns around and gets whacked. That's why when you're trading options, if you're an option seller and that option doubles against you, boy, that's the first big sign that you better get out of the way, because you don't want to get caught in one of these things that can really hurt you badly. And in fact, my good friend Alan Quartermain Pastavazul, he got stuck in one of those. It cost him about $48,000 one day because he didn't get out on a Thursday, and Friday they came out with an announcement, and he got really hammered. And there's nothing you can do about those, because when they happen, just like the Pfizer thing. Some people got hurt pretty bad at it, but we'll move on to the next one here. We're going to take a little break here, and then we're going to come back and review the numbers that are really important from my perspective. And, of course, like I say, if you pay more than 2 cents, you've overpaid. The name of the book is Reminiscences of a Stock Operator by Edwin Lefevre, an absolute must for your library and your children's library. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, posted the chart of the crude oil. You notice that number that we made up there, that 43.10. That was a 61% retracement on the long-term daily, folks. I believe I can get that up here to verify that. There we are. We'll just get that up here. You'll be able to see that it went back and made the same number that we were looking at right there. You'll see that's where we are. Now, if we get above the 42.20 level, that will tell us that 382 retracement at 41.87 is probably not going to work. So it's got to be within 40 points of it actually working. Now, whether that happens or not, I'm not sure. but it's just numbers related. That's really what we're watching here as we go through here. The next question that we're going to have, someone asked about Norman tomorrow. Yes, Norman will be on, and he's going to talk to us about his prediction on the election and what he's seeing about it. And he's always got some good timing stuff, so that's always really good. Usually we have him on a new moon, and the new moon comes on Sunday, the 15th this time. So we're going to have him on tomorrow. And that is also triskaidekaphobia, fear of the number 13. And everybody that knows anything about the Knights Templar, why that's so very, very important. Okay, boys and girls, I think we got the clock on the wall telling us it's almost time to go. The key number to watch today in the S&P, folks, is 3575. If we get above that, we are going to go higher. If we don't, the odds favor. And odds, chance favors the prepared mind. We think it will go lower as long as we don't get above 39.75. That's the number. 35.79. That's the number that you want to pay very, very close attention to. So keep in mind that's what we're looking at here as we're watching these markets here this morning. And I want to thank you for being with me again today. And with any luck at all, we'll see you tomorrow at the same time. So live every day in an attitude of gratitude, and may God bless.